When it comes to lease renewals, the highest price isn't always the best decision. So just because it's rent renewal time doesn't mean we should automatically shift into raising the rental price. If your lease is expiring on your resident, and let's say the rent's an extra $150 in the market around the surrounding properties, you really want to think carefully about, is it the right time to actually renew this tenant in general? Should we be doing an increase at all? And is there a benefit, or could there be benefits to staying a little bit under market rent? So that's what we're going to talk through today, is how we think about renewal strategies to maximize cash flow for investors and how we think about the renewal process. Okay, so there's going to be a few things that you're going to think about when you're renewing the lease. Obviously, taking a look at lease expiration, I think most leases are going to say 30 to 60 days before the lease expires. It's kind of when those discussions should be happening. We like to execute by 60 days or shortly after. Of course, there's different situations, things that may bring it a little bit closer to lease expiration, but the sooner the better, especially for investors. They're wanting dependable cash flow. So we actually like to work 3, even 4 months out. I mean, there's really no reason to wait up until the end. So if the owner's okay with renewing the lease, the tenant's okay, we're always big fans of doing it sooner than later. We wouldn't typically do it probably more than 4 months, prior to a lease expiration. So you're going to be looking at the current rent, the market rent, and the current investment market, right? So competition among other vacancies, you have to consider if the tenant does leave, you're obviously going to have to make repairs to the unit. So the cost, some of those could be on the tenant, but if there's curb appeal stuff that you're going to have to do to re-rent it, that's going to be out-of-pocket costs for you as an investor. So there's the turnover cost, obviously just holding costs while it's vacant, mortgage if you have it or not. But because we're seeing some rental decline in the area, there's a good chance that you may rent it for less than the last tenant. So all of this is kind of stuff you want to be thinking about. Property condition being one of the biggest ones, especially if you know that the inside of the unit has not been updated or the tenant's been there for a really long time, and you're going to have to put in $5, $10, $15,000 just to renovate the unit. It's going to be a good idea to consider just keeping them in place, at least for now, until the market comes back a little bit. So property condition, lease expiration time, you could consider letting them go to month if there's some sort of issue. One of the other things that we're going to look for is their balance, right? Do they have an unpaid balance or not? If they still owe a little bit of money, you may allow them to go month to month for a little bit before renewing. You could still increase the rent on month to month. You may not. And how long have they been in the property? How many times have they been late on rent? Are they always paying late? Do they, balance payments? Are they an issue resident where if they're in an HOA and they're always getting violations and you're having to either pay for that maintenance and charge it back to the tenant, or just all the extra coordination that comes with that? So property condition is one thing. The market, what you're going to do on the rental price is another, but just what's the experience been with the resident while they've been in the property? So if you're taking a look at the market rates, you're working with property manager, they're going to probably make recommendations. If you're a DIY investor, asking around, maybe getting an agent to pull some extra comps. If you've been generally doing increases each year, whether it's $25, $75, whatever it is, like you're probably going to be pretty close to market rate, I would guess anyways. And so vast majority of kind of what we're doing now, I would say, is recommending either no increase or very little. Maybe it's $50. Maybe it's $100 at most if somebody's been really under market. But we don't think it's a bad idea in the current environment to be a little bit under market rates. And we have some properties, one of my personal rentals, where the tenants are probably at over market now because the market's softened. And so I've just kept them there. I don't typically do month to month, but I do have these people on month to month. And so the month to month stuff's really more a benefit for the resident. The property managers are not really going to like it. They may not even let you do it. They just either kick out the tenant or do a 12-month lease. And for the ownership, it's not really a great thing because the tenant could just give notice and you don't have an easy way to forecast future cash flow. The only benefit, like I said, is if the resident has a little bit of a balance or they've been falling behind more recently towards the end of the lease and you really don't want to lose the tenant. Like I said, you could let them default maybe for a month, 2, 3 months, just kind of probationary period to see if they can still get caught up to then renew on a 12-month lease. So we talked about vacancy costs, repairs, obviously mortgage, stuff like that as well. The timing and seasonality is a big thing too. So let's say the lease is going to expire in November. Yes, you could sign another 12-month lease until next November, but maybe it's better to actually sign a longer lease to kick that to the end of January. And maybe you just give the tenant, a couple extra months at that same rental amount versus trying to get some sort of increase at the 12-month, automatic, even though it's a 14 or 15-month lease. So time of year is really important. We just released some data from Rent Engine. We'll be doing another video on Q2 leasing data. So the peak season, to kind of think about when should leases expire, if you have control over that, bumping out to that longer lease, as March to September, but it really peaks, April, May, June, July. Those are kind of the top 4 months, I'd say. And it starts to slow down August, September, really slows down October, November, December, then January again. So that's something you want to think about. Again, whether you're doing it yourself or you have a property manager, and especially if you have multifamily properties with a lot of units, you want to try to limit the amount of vacancies that you're going to have in any one month. But even if you have to have a month where there's a lot of turnover, having that turnover in peak season is going to be best, right? That's where everyone's moving. So even if you have a big vacancy turnover and you're pushing a bunch of leases into that sort of middle peak season of the year, there's still a better time to do it. So that's something to consider as well. We've been trying to do a better job as a company, really playing with those lease renewal dates and trying to optimize that, especially if an owner has like 3 single family houses, trying to think around their whole strategy about the renewals and not that all 3 houses may go vacant at the same time, which can be difficult, obviously, depending on when all the leases came in, but either offering a little bit shorter leases or a little bit longer to kind of play with some of that is definitely something to think about. So things to consider for not renewing. Some of it we discussed: late payments, lease violations, how they take care of the property. Have they had violations on extra people there, too many cars, not parking correctly? Have they just been kind of an annoyance to deal with? And, if we have a property management company, you might not really care how much effort we have to go through it. If it's a problem tenant that, treats our employees bad on the phone, always submitting maintenance for every little thing, even though there's maintenance that's going to be covered by the lease, some by the landlord, just dealing with all that extra communication, right? Has this really been an issue tenant to deal with? And then, of course, the owner's financial status with the property, right? So if they're losing money every month already because it was a primary residence and they had to move out and the rents aren't getting a good enough increase above the mortgage, if it's an investor that has a lot of vacancy, that might be also something to consider where, man, like we really would just prefer not to renew this tenant, but they have a 10-unit building. There's 2 other vacancies already, or we know that we have, 3 more renewals coming up. There's a strategy around that needs to be considered as well. Or does the owner have plans to sell the property? So a new buyer coming into a property, if it's single family, it's a good chance it could be an owner occupant that's going to buy it. And they're going to want a month-to-month lease or something that's not ending very long into the future, so that if they buy the property, they can move in time for their loan, or that the tenant could vacate by the time the closing is going to happen. If it's a multi-unit property, that's probably not going to be the case that they're moving into it, but they could have plans to sell it. And so a benefit is usually the value add, right? Buyers are going to come in, do some repairs, raise the rents. So there does need to be that strategy talking with the owner as well. If they're going to be having plans to sell it or refinance, that might dictate the need to push the cash flow or to leave some wiggle room. So refinancing, if you're going to have to sort of get those rents up to get a different loan, then that's going to be something that you're just going to have to deal with, raising the rent and possibly losing a tenant, right? So it is a little more complex. Usually you probably just hear lease renewal and you're like, it's pretty straightforward. But when we're managing properties at scale, or you have multiple properties, these are some of the extra things that we're thinking about to make sure we maximize cash flow for the owner, because everybody hates vacancy. We hate it because we don't make any money while the property's vacant. It hurts for the owner, not only for the missed cash flow, the market soft, the repairs. Like there's just a lot of volatility in the market where we want to be conservative and try to keep people in place because everybody wins, and it makes things a lot easier until the market shifts and maybe we get some better increases and the market picks up a little bit. There's not so much oversupply and competition between single family and multifamily vacancies, especially in the multifamily space. So hopefully this video was helpful for you guys, but that's how we think about lease renewals. So there's 3 ways that we'd love to stay in contact with everybody. My information is on the screen. We have the YouTube channel. If you scan the QR code, that's going to take you to our newsletter, which is mostly for private clients that we have. So you'll be able to get some perspective of just stuff that we share monthly from there. And of course, the podcast as well. But on the YouTube, we also share a lot of educational content. And then we do interviews. We do at least 1 or 2 a month of hard money lenders, tax attorneys, CPAs, cost segregation guys, self-directed IRA. We just had how you can invest in real estate with that. So a lot of different topics, just to keep you guys updated on what's happening in the marketplace, give you a better perspective of how to be a better investor and how we think about stuff as, being in the area for a while now. So thanks for watching. Have a great day. Please subscribe. Thanks.